Hey guys, and welcome back to my third video on this series about the stock market. So, I wanted to keep this real brief. My last video was about charts and mainly candlestick charts and a couple of real basic indicators you can use. This video I want to touch on more of different types of orders you can submit, how you go about actually buying into a stock so we can become profitable. Um, so there's a couple different things. If you already have an account with a brokerage, you might have already seen, or I'm guessing you've already seen some of these different types of orders you can submit, and it can be a little confusing at first. I know I was confused when I first started. So let's get right on into it. So our first order is going to be the market order, and what this is really the most kind of basic order you can submit to the market. What it really is, as I said here, is placing a buy or sell order at the current market price. So I have an example right over here of this is Airbnb. So the current price is right here at the close of this candle all the way to the right. You can see here it's at 209.35. So if I wanted to submit a market order, and for some reason my strategy was, and my plan was telling me that's the price I want. This looks like a good buy. I want it now. I would submit a market order at 209, or well, I would just place a market order, and then it would fill me wherever the market order is really kind of a more basic generally, like, if I'm being honest with you guys, I rarely ever use a market order. I'm gonna get into this later. I almost always use limit orders, which I'm gonna get into in a few minutes here. So, but yeah, the market order, real simple, not a whole lot of thought into it. You just place your order, click buy or sell, depending if you're trying to short the stock, which I'll talk about later, or if you're trying to exit out of position or get into a position. You just place it and it's at the current price. Okay, limit orders. So this is probably the most used type of order you can use to place a buy or sell. So it's like I said here, it's at a specific price. So let's say my strategy said, or that I was implementing, wanted this price. If I was looking to buy it, I wanted to see it dip before I bought it. I would maybe put a limit order here at 208, and I wanted to see it fall in order for me to get a better price if I was very bullish on this stock, and I wanted to get in, but I didn't want to get in right there, so I wanted to see it dip so I could maximize my profits. I could get in on a dip and buy even lower in order to sell high. So just as you can do it with a buy order, like if you wanted to place a limit order to buy, you can also do it with a selling price. So let's say I'm already in Airbnb and I want to get out, but I want to see it go up before I get out, and I have a certain price target for it. So if I wanted to see it go up and my price target's at this number right here, 211.20 per share, I want to see it get up, and I'm going to place my order at 211.20. So I say when, but if it gets up to that amount, and it hits that 211.20 level, even if it surpasses it, it's gonna take my position out at 211.20. So one other thing I believe to be very important, especially when you're new to trading, is a stop loss. Now, at least for me, I know the title stop loss seems a little misleading, like you can't lose money, but what it really is, it works kind of like a limit order, but it's an order set at a specific price that will exit you out of your position if it gets to that point. So let's say the CEO of Airbnb was just killed or something. Now, obviously, that's hypothetical. That hasn't happened, at least in the making of this video. But whatever. Let's just say that the CEO of Airbnb has recently died. Now, that's most likely going to plummet the stock to the downside here. So when I buy this stock, if I already have a position in it and I'm going long, you I'll place a stop loss order below it. So what now if I'm going long, I want to place a stop loss below where I buy. So let's say I want to buy on this candle right at the close, which is 209.35. So I buy right here. I mean, this is going to vary based on your risk tolerance, which is also very important. You want to decide for yourself how much room are you going to give yourself? Like how flexible are you and how confident are you that this stock is going to go up? Whether or not it starts to buffer or consolidate, it's you think it is going to go up. So that's all based on your risk tolerance. How much are you willing to lose? So let's say I am not willing to lose a lot. I am going to put my stop loss. I mean, this also varies. I'll probably put it somewhere around 209.20. And that's a pretty extreme example because I mean if I bought at 209.35 and I mean this is on the 1 minute time frame, this candle's most likely gonna hit that 209.20 level before it goes up, if it goes up. But we're just speaking hypothetically here. So if I were to place my stop loss order at 209.20 and like I said earlier, the CEO of Airbnb has just died or something, and that's hypothetical. Um, we would see the stock start to plummet, and then if it went down really fast and you can't get out quickly enough, well, that's where the stop loss comes in. So it'll automatically take you out of your position if the stock starts to fall dramatically, and dramatically based on your risk tolerance. So what I have pulled up here, you can see right here, and I also put a line right here just so you can kind of see that price level I was talking about. So this is all these screenshots, by the way, are from a platform called Webull. That's Webull. So that's the platform I use for my charts. I use E-Trade as my brokerage, but all of these orders are from kind of widgets and are from Webull. So this is just kind of for an example of if I wanted to place my stop loss here at 209.20. This is kind of near where I would place my order, so it's going to give you that option if you want to place a stop loss, and you'd click this. Click this box, and you would type in where in this box right here, you type in where you want to put your stop loss in that price right there, and then you put that in there as you submit your order. Okay, and the screen I clicked on before is short selling, and this is the last section I wanted to talk about. It's been a little bit of a hot topic lately at the making of this video. So what is short selling? Because honestly, this confused the heck out of me when I first started trading. So, I mean, it's a risky, and I'll explain this more in detail later. It's a risky way to profit off of a declining stock price. So, yes, this is what mind boggled me, is you can make money if a stock price goes down. So what And how you go about doing that is, well, you actually want to place a sell order before a buy order. And trust me, guys, I know this sounds weird, but to go into depth of more what's happening is a broker finds a share or shares of the stock either from your their inventory or one of their clients' portfolios, um, and really what they're doing is lending you those shares or share, and in the terms that you're gonna buy it back and give it back to them later. So, well, like I was saying, how do you exit your position out of a short if you're already selling? Well, you have to buy back those shares, and they basically are sent back because it's through your brokerage. They're sent back to your brokerage in a way. So you, in order to make a profit, short selling, like I said, making money while prices go down. Yes, you want to buy those shares back at a lower price than where you initially sold them, or for lack of a better term, shorted them. Um, so why is this risky? Well, if you think about it, if you go long on a stock or you buy a stock, you can technically only lose 100% of your the amount you bought into, because a stock can't go below zero. It'll bankrupt, and then that's at 0%. But when you short a stock, if you think about it, a stock could go up infinitely, and that's really kind of I know this might be getting into a little too much, but that's what leads into a short squeeze. And what we've been hearing about, at least during the making of this video, what we've been hearing about in the news and with Wall Street Bets and GameStop and AMC and all of those big titles out there are short squeezes. So I might as well just go into that in this video because it's a big news topic. So what is a short squeeze? Well, when you short a stock, or in this case, because of the news, those hedge funds that have been heavily shorting stocks, if that price goes up and it rises above 100% of your account, your broker will actually take you out of your position. Like, your broker will do that for you, whether you have a stop loss placed there or not, because you're losing. And I think this might vary between brokers. I'm not totally sure, but they'll take you out because you're losing too much money. And well, like we were saying before, how do you get out of a short position? You have to buy back those shares, and thus, you become a buyer among with all of those other people that are buying into a stock and kind of overwhelming that price. So you become a buyer along with them, which increases the price per share even more. That's pretty much essentially what's happening to some of these names out there like GameStop and AMC. Not so much right now. And you'll see it a lot when those happen. It's just a spike because the price just inflates. But yeah, so if you look at the charts of those stocks, at least during the making of this video, you'll see they've come back down. But I mean, that's pretty much it for today's video. Thank you guys so much for watching, and real quick before you go, if you could leave a like on the video, it'd really mean a lot. Also subscribing, and if you want to be notified when I make a new video, you can hit that bell button and it'll notify you each time I release a new video, because excuse me, because you want to learn as quick as possible, stay in the money, But yeah, go check out my other videos too. if this is the first video you're watching and you're a new viewer, well, I thank you. But you're definitely going to want to check out those other videos. Otherwise, you might not understand too much what's going on, because this is a series. And so, yeah, that's really it, though. Hope you guys have a good day. Take care.